Well, we go to the ends of the earth to make sure that we get Larry Goldberg on once or twice a week. And in this case, we're going all the way to Paris. No, are you still in Paris?
Yep,
Still in
Paris.
Paris. And drove yesterday from Amsterdam to Paris in a Tesla.
That's right. That's
Yeah.
right. And it was, oh, I thought, yeah, it was very pleasant. A lot of superchargers on the way. A couple of significant differences between driving a Tesla here and driving a Tesla in the US, which I'll discuss. I mean, the biggest is lack of FSD. I didn't realize how much work there was in driving. I mean, I've forgotten how much work there was to driving. It's very significant. You know, people don't actually give credit. Even the Tesla guys do not give credit to the value of FSD, where you don't have real full self-driving. You know, you have supervised driving.
Right.
But
Right.
even the supervised driving, it's an enormous help.
Sure.
Enormous help.
Sure. Yeah, absolutely. Well, we're going to get into the Cathie Wood slides today, finally. And we will, of course, talk about what happened today, although not in very much detail. Basically, the most important thing that happened today, Larry, is that maybe you've been following it, maybe you haven't, is that the country of Brazil, the Supreme Court justice or the chief, I'm not sure what, he has decided to bring criminal charges against Elon Musk and Tesla. No, I'm sorry, and X.com for failing to follow their rules and regulations regarding censoring their political opponents. So, are you at all worried that Elon will be taken away in chains?
Can you see any furrows in my brow?
No, you don't seem terribly anxious or concerned.
I think it's it's a commentary on the country of Brazil, rather than and the times that we're in general.
Sure.
You know, but look, there's all kinds of countries, country regimes that differ from our own. It's just the way it is. I'm in Europe right now, and Europe definitely has, some significant differences to the US, and it's not bad or good. It's just different. On the other hand, what they're doing in Brazil is bad. It's not different. It's just bad.
Yeah, he said he drew the line. He says, "Look, if you want me to censor these particular individuals, I'll censor them." But he said he wanted to say that it was the government requiring him to do the censoring, not a decision on the part of X. And when they said, "Nope, you can't say that," he said, "Okay, then I'm going to become defiant then." So they might get kicked out of Brazil, they might not, but he's standing his putting his feet firmly in the position of free speech. I think long term, this is going to benefit Elon. I think it's going to benefit the world. I think it'll, to the extent that it matters, it will benefit the Tesla stockholder long term.
Well, I don't know about the benefit to the Tesla shareholder, but certainly, I mean, as an investor in X, I stand by him. I think this is something we have to do. I don't think, it's better to withdraw from a country than to get into this kind of situation. So,
all right. Well, we want to take a look at Cathie, of course, Cathie Wood, every employment day, she calls it, the first Friday of most months, if it doesn't fall on the first. We get those employment numbers, and we went over those on Friday. But then Cathie Wood does a significant job of really digging into the entire economy with a bunch of slides, and talks to us about where she thinks the economy is going based on all those data points. So, Larry, you want to go ahead and share your screen, and we'll talk about what she had to say this month.
yeah, and we should also say at the same time that we should be clear that this is all ARK Invest, the firm of ARK Invest is their slides prepped. We're giving commentary on really Cathie's commentary and on their slides. So I think that's fair, right?
Right. And I also found it interesting this month, Larry, as you put it up, I found it interesting. She didn't really have a theme about the economy this month. She spent the first 20 minutes talking about Tesla, which I did a program a little bit talking about what she said about Tesla. But it seemed as if her programming around the economy, she didn't have a thematic approach, which she normally does. She'll usually say, okay, this is kind of how I see the economy going. But this month it was more or less, she just got the content up and talked about the specifics of each of these slides that we'll be going through.
Right. So if I can just put this into screen show mode. I'm working, you'll forgive me, I'm working with a laptop, which I don't normally use. I normally have a desktop that I can manipulate multiple screens. Struggling a little bit here. Can
Yeah.
you all see my screen?
I
guess
can
you
see your screen just fine. We can see a chart, and I guess you're trying to put it in some kind of a mode
Share
that
mode, yeah, display mode, and I just having here we go. They overlay so many information panels that it's hard to show the whole screen. Right. So now I've got it. Now
Yeah, Larry, you've been in the software business all these years, and there's always been this question, when the first computers came out, they were hard, but they were actually simple. And then as they get more, as we add layers and layers of really cool things that we can do on them, they become complex to the point of I went on Microsoft Excel the other day, and I was almost lost. And I know Excel backwards, forwards, and inside out. And I was getting lost trying to find out because of all the new stuff that they've provided now.
yeah, I mean, and we're going to go through another process, getting used to all the add-ins, the so-called add-ins for AI.
Yes, that's going to be a whole new layer of complexity.
Anyway, I thought Cathie showed one very interesting slide, and we're showing a slightly shortened version of her whole presentation. I highly recommend anybody who's interested, go in and look at the full presentation. But we do have a shortened version, a shortened outtake. This is very interesting, though. This blue line here is the net interest spend as a percentage of GDP. You're following that point up to here.
Uh-huh.
This is the projection, the CBO, that's the Independent Congressional Budget Office, shows of the percentage of the budget the percentage of GDP, not the budget, but the percentage of GDP that interest alone will take of our take in order to pay the interest on our debt. Now, at this point in the conversation, I always bemoan the fact that we missed the opportunity 6 or 7 years ago to finance, our entire debt at a 50-year 1% mortgage, at a 50% issuance. But nonetheless, this is a pretty serious situation, and we really have to be doing something about it. It'd be interesting to know what the percentage of GDP is being spent by Japan. But if you look at Japan's, aging population, you look at its interest on debt, you get a sense of what we face if we don't A, have children, B, reduce our investment, in government services, at the expense of our economy.
Yeah, and Larry, a recurring theme for Cathie, a recurring theme for this channel, something I think that is very, very important and something that's going to have a big impact, but will impact, and she said it and when she was talking about this slide, is productivity. If we get the productivity that we think we're going to get over the next 3 or 4 years, this could be turned on its head. I mean, literally, the productivity could save the union. And if you go back to the 90s, you can see how the amount dropped dramatically from the 80s as the productivity of the 90s had the impact that it did. Now, that was partially due to the Newt Gingrich and Bill Clinton agreement to go ahead and try to get the spending under control. But I'm not sure they would have accomplished it without the productivity increase.
Yeah, you're absolutely right. I think it takes two sides to the equation. But this is, what we're looking at is a lot more serious than we were looking at in the 90s.
Oh, yeah.
But you're right. I mean, I remember in the late 80s having conversations with an economist friend of mine and saying, look, you have no idea what's coming because of the computer revolution, and it's going to change everything. And, he kind of hoo-hawed. He said, no, these things come and go. They don't. And we are definitely facing, a complete new, another great revolution.
Right.
And so it's very interesting to see where we go with it. But it's something we have to pay attention to. And then we looked at the money, M2, Cathie looked at the M2 money supply versus inflation. And, here we have, the year over year percentage change in the money supply versus inflation. You'll see that our money supply has picked up. Actually, I've cut the slide off at the bottom, but it's picked up a bit. But I have an idea that it's being ameliorated even as we speak. I think the money supply is definitely, right now, I don't think that the problem is the Federal Reserve Bank. I think the problem is simply the fiscal spend, the congressional spend, the government expenditure rather than the Federal Reserve money supply. Right.
This is go ahead.
This is the slide. This is just a better slide.
And so this is also backed up. The inflation the light green line is leading by 18 months.
Right.
Or I'm sorry, M2 is leading inflation by 18 months. So that's why you see that the purple line extends out further than the green line does. So the inflation impacts the M2 later.
Generally. Sometimes there's anticipation that gets built into it. When you see the money supply drop precipitously, or you see it raise precipitously, sometimes what happens that people spend less or spend more based upon what's coming in the future. So it's kind of it tends to ameliorate itself. Yeah, and this is the expectations of the University of Michigan. The survey, their expected change in inflation rates versus the Federal Reserve Bank of New York, their expected inflation rate. And by the way, you see they've actually both joined under the 3%. It looks,
right.
For once they seem to have converged. It's quite important.
And let me just remind people that the University of Michigan statistics are based on a poll of just regular folks. What do they think is going to be coming up? Consumer expectations versus the New York Fed putting together their, elaborate approach. And you can see that most of the time they're darn close. They weren't very close during the 2021, 2022, 2023 area, but now they've come back to being fairly equal at around 3%.
Well, and part of that is that this particular Fed is doing a very, very extensive job in advertising its intentions and its objectives, which is more than has been done in the past. And then the yield curve, the famous yield curve, we're getting close to a zero yield curve. That is to say, the short-term interest rates are almost as far down as the long-term interest rates. And we are getting back to we're not back to, but normally the long-term interest rates have got a premium to them, so they're much higher than the short-term interest rates.
Yeah, so we're sitting at about 35 this morning on the 2 versus the 10-year, about 35 basis points difference, which is pretty much what you're seeing on the chart. But yeah, as you point out, except for recessionary periods, this generally speaking is the other way around.
But, looking at this chart since 1980, there hasn't been a period that this hasn't gone below zero. This differential, the yield curve hasn't opened up, below zero, where we haven't had a recession.
And then Larry, I've been pointing this out a couple of times the last week. Notice how it starts up again before the recession hits. And we are seeing the gap close now, as you can see on the chart, but it's even more obvious on a day-to-day basis. We're talking about it. The 10-year, I'm sorry, the 2-month. Some people look at the 10-year versus the 2-month, and the 2-month, which had been running around 150 basis points, dropped under 100 basis points today for the first time I can remember. Yeah.
So that's kind of a, red flag.
Yeah.
And the real federal funds target rate, actually at the 2.5%, it's getting close to the norm, right?
Right.
So
Yes.
I think that, there are a lot of, as usual, there are a lot of conflicting signals from the economy, and this is not unusual. But we'll get onto some of the commodities and look at what they're telling us, and I think that's interesting. That will be more interesting than the monetary signals. Now we're going to look at employment, a little bit of employment, and we're looking at non-farm versus household employment growth. And we see household, and this is the poll of the household. This is where people get phoned up and say, "Are you employed?"
Right.
Yes, no.
And that's the light.
That's the green. That's the green, the light one, if you like. And you'll see that it's dipping down to zero, which is a lot different to what the non-farm payroll is telling us, the Fed reports, which is still at the 2-3% mark, at the 2% mark.
Mm-hmm, mm-hmm.
And so this is also a warning signal, by the way. A lot of warning signals.
Yep.
But we've had a lot of warning signals in the past as well. But this is quite a big gap. It's not often that we see such a big gap.
Yeah, Larry, we continued, and she didn't have as many slides this time about this, and I did talk about it a lot last week.
Mm-hmm.
The employment numbers that we were all concerned about and interested in were the numbers like how much of a revision did they have, because they've been revising them so much. This particular time, they didn't revise it. In fact, it was a slight upward revision.
Upward, yeah.
And so that was actually good news.
Yeah.
The amount of hours worked was slightly up, which was good news. But what was continuing to be bad news was part-time labor was getting almost all of the increase, and government and medical was getting almost all the increase. So we're still seeing some signs that we don't like in these employment numbers, but all in all, they're not too bad. And that's why Larry, you didn't know this probably unless you've been watching my show on the road. I changed my deal again. I'm back to 100% no chance of recession in 2024.
Yeah, I'm a little bit more optimistic than I have been, but I'm not prepared to go that far.
Okay.
So here's the temporary help versus total employment. It continues to be, completely unbalanced.
Yeah, I'm not ready to give this one as much credence. I've mentioned this in previous Cathie Wood reports. I think we have to take into consideration the weirdness of that supply chain problem and the employment problem. And so I'm waiting for a couple more months. I would say probably have to wait 6 months to see whether this materially changes to normal, because employers will have been able to shed these extra bodies that they really don't need right now.
I am seeing a big change in sentiment amongst business people,
Okay.
amongst the employers, and I'm seeing a situation looming where people are going to be let go in fairly significant numbers.
Yeah, I think it needs to happen.
Yeah.
Yep.
And so that's one of the reasons that I still remain concerned.
Okay.
So here's another indicator, auto sales.
Yeah.
Can't get back up to the 17.5,
Yeah.
just can't get there. Down to the 15. And is that a new normal for us now? I don't think so.
Yeah. Well, you've got the population growing. Yes, the population is growing. Whoops, I've lost you, Larry. Are you there someplace? I may be going alone here without Larry, as he seems to have pushed the wrong button, maybe. Yeah, the auto sales, we've got increasing population, which should be showing up in auto sales. But then again, we've been in this period where it's hard to gauge how much of the drop in auto sales right now might be part of this overall up and down economy that we've had over the last 3 years caused by the COVID. So will auto sales ever recover? That's a question a lot of people are asking. If they continue to be in the 15.5 range, that could be the new normal. Now, we're also going to be impacted by the nature of how automobiles are used in the future. People working out of their homes more. We're a one-car family because I work out of my home, and it's just not necessary for us to have 2 cars. Every once in a while, it's a slight inconvenience, but I can call Uber if I need to. So there's that. There's young people that don't feel they need a car. They're used to using Uber. And then we've got, of course, the Robotaxi future, which could dramatically change the number of cars that need to be built each year. All those going to affect the car business. But Cathie's point was, this is an economic indicator, maybe, of still being in a slow period. So I'm beginning to believe that Larry is, for whatever reason, not able to get back with me. So what I'm going to do now is I'm going to take a look at the market today, see where things turned out to be at the end of the day, and maybe a little bit about tomorrow. Even though it's early in the day that I'm shooting this, so I'm not going to have the pre-market yet. But we have Tesla ending up the day up $8.08. And it's down a whole 8 cents in the aftermarket. So it is holding on. We had the Magnificent Seven mixed, but mostly down. So Meta, Microsoft, NVIDIA, and Apple were all down, with Google, Amazon, and Tesla. Of course, Tesla dramatically outperforming the markets today. We had the Dow Jones down 11. We had the NASDAQ up 5, and we had the S&P up 1. So I'm not even going to bother to look at the percentages on those, because basically we had a flat day. And hey, for once, I was right. This morning I said we'd have a flat day today. I'm predicting that unless there's magic or some weird thing happening between now and this time tomorrow, that we'll have a flat day again tomorrow as people wait for the CPI. Now, one thing that did impact the markets today, I was like, all of a sudden there was this big dip, and everybody like, what in the heck just happened? Well, we had our Treasury Secretary Janet Yellen telling the Chinese that if they don't, if they start helping the Russians monetarily or with weapons or anything else in the Ukraine war, that the United States could take actions against Chinese citizens as well, or leadership, as well as against their banking system. So that was quite a throwing down of the gauntlet, and it affected markets, but not for very long. They basically went back and just went flat again for the day. So that's kind of how markets, that's how the equities went. Let's go ahead and take a look at the rest of the market. We had the bonds. They did end up the day about where they were this morning, if you watched after the bell. So up, the 10-year up 4.6 basis points. And the 2-year was up actually more than that, spreading after we just talked about the yield, but that would spread the yield since the 2-year was up more than the 10-year. And then we had the 2-month barely going up at all. So that would be this yield coming down. Very interesting. All right, then we've got oil, which we've talked about. Oil has been buffeted by all kinds of things happening in Russia, with the Ukraine bombing them, bombing their oil supplies, with Russia dropping the amount of oil that they are shipping on a daily basis. We also have I talked about it this morning in the show that apparently some of the oil pumping facilities that count on selling off natural gas are having to slow down production because they can't sell off the natural gas at these cheap rates, and sometimes they're even having to give it away. Now, maybe that news hit the market because natural gas was up 3.14% to $1.84, still not within range of what they said was the 250 that they needed in order to be able to operate. So, Barry, you've made it back with us again. Did you have any I'm just about to talk about gold, which I think you might have some thoughts about. And then copper, any last thoughts from you with regard to the Cathie Wood report and the general status of the economy?
You know, there are always ups and downs in these economic reports as we study them from quarter to quarter, month to month in our case. And you're right, there are sort of reasons to be a little bit more optimistic right now. You, Randy, are a very optimistic person, which is a great thing. I'm a less optimistic person. I'm older than you, after all.
I know.
By all of 2 years, is it? Or is
I
it
think
just
it's
one?
exactly, almost
Oh,
exactly 2 years. Yeah.
Yeah. And I am less exuberant, but that's really my closing remarks, I think.
Okay.
Yeah.
All right. Well, we have gold, which has been continuously screaming higher. I think we never got to the commodities slide there a minute ago, but commodities in general are now beginning to pick up. So generally speaking, the commodities do follow gold, but usually it happens much sooner than this. Gold has now been having records day after day after day after day, up another $12 right now at 23.57. But copper, you're canary in the gold mine, and I know you're not the only person who feels that way. But copper was up again today. Whoops, I'm missing my spot here. Here we go. Copper was up another 1.33% today at $4.30. That is up from the low in October at $3.55. So that's a pretty substantial, that's like 25%, I think.
Yeah, and I wonder how much of that is related to this tremendous amount of industrial rebuilding in the United States, because China is not opening its doors. China remains, very troubled. I haven't seen a big change in China, but there's a lot of industrial reconstruction or construction in the United States, and this may be a canary in the coal mine. Gold it's a political thing. I think it is a flight from the dollar. That's what gold is, and I think Bitcoin is getting some of that, attitude that we've got to find something that the United States can't reach out and grab.
Yeah.
And so that's what I think we see.
What
Actually,
yeah.
all soft currencies in the third world are down very dramatically.
Right. Yes. And in fact, the United States, again, is right now the strongest by far of any of the Western nations. And one of the articles I saw the other day, Larry, that made sense to me, and I think they had some stats. They must have had some stats to back it up, but it was saying that China is buying a lot of gold for their central government. They were down to 20% reserves on gold versus their overall assets, and that the Chinese population is buying a lot of gold because they used to have their savings, have their retirements in the real estate game, and the real estate thing has gone away. And they don't have the number of investment opportunities that we do, places to put their money. So gold, apparently the individuals are buying gold. And then I think it was Bradford Ferguson said the other day, he says, maybe it's Costco selling those gold bars one at a time. So I'm not sure which it is, but I know Costco.
It's not
I know
not the
Costco's
Costco
doing
same.
really well. It's really doing well for them.
And they have no impact at all on the gold price. The volumes there are very tiny. No, the real story is the flight from the dollar, but the dollar is so strong it's
Uh-huh.
extraordinarily difficult to fly from it.
Right.
And Bitcoin to a lesser degree, but gold to the maximum is enjoying that flight. The problem is there's just not enough gold to really become a serious, reserve
Mhm.
for the world. I think that's why the world moved on from gold. But the third world certainly is embracing it, led by China. And, Bitcoin for others would be a more serious opportunity. Some people say a less serious opportunity. But that is definitely what is happening.
So Bitcoin, to your point, is up 2,400 points today to 71,708, pushing up against, I think the high was up in the 73.5, something like that. So
I'm very bullish on Bitcoin, very
okay.
bullish.
Yeah. And are you buying any or just the miners?
No, I'm not buying miners and I'm not buying Bitcoin. Just because I'm bullish on it doesn't mean I buy it. It doesn't fit my profile. I don't want to leave my children with a bunch of Bitcoin until I have a much clearer view.
Right.
But nonetheless, I expect Bitcoin to move higher.
So Larry, it would be remiss of me on this particular weekend not to ask you your view on the biggest news of the weekend, the reason why Tesla finished up $8 and some change today. So what are you thinking is going to happen over the next 4 months as we approach 8.8? What is going to, is the Gen 3 vehicle still going to be made? Is it going to be made in all 4 plants? Or even 5 if you count India? Is the Robotaxi actually going to be revealed as a unit, as a car on 8.8, or just the system? What kind of thoughts have you had this weekend thinking about all that news on Thursday and Friday?
Yeah, we've had this conversation before. Elon talked about 8.8, and I said that I expected, and this is my timeline, late in this year, I expected later than 8.8. I expected November, December timeframe, just as we saw the Cybertruck in the November, December timeframe. I expected to see next gen in the November, December timeframe. I'm very pleased it's August. There will be a reveal. Reveals always include the car, and so I expected to include the car. I'm thinking that instead of a steering wheel or no steering wheel, we may see an aircraft type throttle for aircraft type controller. But that's just wild fantasy. But I absolutely expect there to be a vehicle. I expect the vehicle to encompass both Robotaxi and the next gen vehicle. I expect the announcement to be that the car will be coming out of the Austin factory towards the end of next year, third quarter, second quarter, third quarter next year. And I expect that now I don't know that it'll be announced, but I fully expect it's going to be produced in all countries. China is going to have to agree to a new factory if we're going to manufacture it in China. But it could be manufactured in India instead of China. But it's a natural for the Chinese market. It's a natural for the Indian market. It's a natural for the European market. It's even a natural for the US market, to be honest, and it's a natural for the Mexican and South American market, excluding Brazil. So everything's happening according to the way I thought it would happen, and really the way Elon has spoken about it. So I expect it. The excitement in Gary Black said that we're not going to see the market react to the Robotaxi until Tesla is prepared to accept responsibility, and it is 99% done, and never had all of that stuff. That's not true. Firstly, I've said it and before, and this evening I said it, and I'll say it again. FSD is worth its cost just as a support, as a driver extension, let alone as a full self-driving, as a robotaxi.
Right.
Secondly, the rate of improvement is very clear now. The path towards FSD is very clear, and I think the market is going to mark these milestones and mark up the price based upon these milestones. I do expect there's going to be some negative price action around earnings. Earnings are going to be very poor.
Yeah.
Very poor. And I think there's going to be negative price action around the earnings. The more important than the reveal, because the reveal's 4 months out, more important than the reveal is going to be the investor call after the announcement. If Elon is his usual combative self, it will not go well. But, Elon can surprise, will surprise. We know that. And a lot turns on that. He's not going to talk product. He is not going to talk product. He will not at an investor call. So those are my summary. That's kind of how I'm thinking right now.
Okay. All right. Well, good. All right. So we finally were able to pull together a way to do the Cathie Wood thing after she had such a weird night of, for some reason, the thing didn't get into the YouTube world. And later on in the day, I checked back and it had gone from 55 to 15,000, which would be normal. But when I did it in the morning, I was number 55 to see it.
They didn't post it in the right channel. I mean, that's what amounted to.
Yeah. I don't know what took place, but anyway, normally we'll try to do that Cathie Wood thing on Saturday morning, as we have been doing in past months. All right, Larry, thank you for staying up. I know it's late there in Paris, but maybe you're still planning to go out and go down to the Moulin Rouge tonight or something.
No,
not going to happen.
no.
All right, thanks as always for coming on, and until next time. For all of you out there, it's been great talking to you.
Take care, Randy.
What have I done? I can't turn it off. Sure hope it
Can't have everything.
Oh, there it goes. Here it is. Boy.